if the U.S. market is doing incredibly well, so is Japan's Nikkei, which hit a new all-time high of 39,098. Our Mainstay Capital Management founder and friend, David Kudla, is joining us right now. David, you're saying don't just buy the Nikkei, buy the Nikkei small caps. How do we do that and why?
Yeah, well, we've seen good afternoon, Liz. We've seen the Nikkei 225 come a long way here, back to a high last set in December of 1989. And, valuations are getting somewhat stretched, but we think there's still opportunity in small cap. We've got a weak yen, decent valuations, and there's, the monetary policy by the Bank of Japan has been far easier than we've seen in Europe and in the U.S. So we think there's, real opportunity there to diversify out of where our primary allocation is U.S. first.
So you can do DXJS, which is the wisdom tree small cap equities for Japan. And you like India, iShares MSCI India, INDA. What's the positive with that? And we've got about 15 seconds left. We're coming up on the bell.
Yeah. Sure. Yeah, both of these countries are benefiting from the lowest investment in China in 30 years. So capital is flowing into Japan, capital is flowing into India. India domestically also has high demand for their stocks, where a lot of countries around the world are in recession. India is expected to grow 7% this year, earnings up 18%. So a good fundamental story in India as well.
David, I like the small cap Japan idea. That way you're not just jumping a little bit late on the big train. I think it's very interesting. David Kudla, as always, our thanks.